Hello, good morning, good afternoon, good evening, wherever you are. Today we are back again here in CA Speakers Forum for a session titled as Living Global Taxing Smart. I thank each one of you for being here, and we will have some audience joining us on YouTube. Welcome to them also. And a deep gratitude and welcome to our speaker, CA Jagariti Mathur, who is based out of Singapore, and she is the CEO of Beyond Seeds.
Uh,
Now, yeah, before we come to the topic, I would like to highlight on two important things in our lives. I very often say that one thing is when it comes to greed, we say that we shouldn't be greedy. But when it comes to money, money is one of the most important thing to be is considered as to be the important thing when it may be regarding challenges, when it may be regarding happiness, and money finds the place everywhere. What we will be taking in the session today, what Jagriti will be taking, will deeply connect to it. And second thing is the belief in the Almighty, which helps you to do your things and get that success. The success which doesn't come without mistakes, the success which may not come without embarrassment, the success which may not come without failure, the success which may not come without humiliation. All the big leaders who have achieved great success must have gone through all these things. Let us see that how we can create a difference to our lives with 1 hour you will spend with us here. I'll spotlight Jagriti. Just give me a moment. And Yeah, Jagriti. So thank you so much for being here today. One thing I would like to add into the her introduction is that I got connected to Jagriti through a friend in Ivory Coast, and she had taken a session for the members, ICI members in Ivory Coast, and the time the session got completed, my friend Ajay Acharya, he sent me a message and that helped me connect to Jagriti. Just met Jagriti 2 months back. I think I'm not sure if it's 2 months or last month only, 1 month back here in Dubai. And today you're back in Singapore, Jagriti, or in India?
no, no, sir, I'm in Singapore, and it was
Okay.
great meeting you in Dubai.
Yeah. Thank you, Jagriti. So all we all are looking forward to it with the emojis and reactions. I request everyone to please welcome Jagriti with a big round of applause. And Jagriti, the screen is yours. Thank you.
Thank you, sir. Thank you so much for this lovely introduction. Just that I'm part of Beyond Seed. I'm CEO Beyond Services. So I'm taking care of the service division for Beyond Seed, which is a VC ecosystem. Would be more than happy to connect with you guys who want to know more about us. But here today, as sir said, we are here to discuss taxation, specifically NRI taxation. So I think we all NRIs, we earn dollars, we spend dollars, we want to save, we want to invest, but what we fail, or I won't say fail, what we struggle to understand sometimes are how to manage that money well and how to do effective tax planning. I won't say fail because I'm amongst chartered accountants and I think we are some of the best brains, but sometimes we also get confused because we are dealing with so many multiple geographies where we invest, we grow our money, we flourish. So here I am, with little whatever little nugget of knowledge that I have to share with my peers here. And today we are just going to discuss tax. Okay, how to manage our income, investments, and residencies for us NRIs, individuals, right? So I think most of us would agree that we have some or the other investment in India, be it property, be it some other funds that we have invested in, be it some gifts that we have received, or be it some projects that we are doing. Of course, it's home country, right? And we really want, sometimes we need clarity on what is my residential status. Do I need to file or can I skip? And some of us, really some of us, who plan to move back to India or who have moved back, we try to understand, okay, what benefits can I get, how I can manage my money better, whatever I've earned, how can I save it. So we'll just dive a little into these aspects today, and it'll be good to make it an interactive session, but of course we are going to have a Q&A at the end. So I may ask some questions in between. I would give some examples and I would like some response from you guys. But yeah, any Q&A or particular questions you guys have, I would appreciate if we can take it at the end of the my presentation. And yeah, I hope you guys enjoy this session, so let's start. Okay, so what is the agenda for today's session? So we are going to discuss, tax residency, RNOR status, residence, non-resident, ordinary residence status, income tax. How can we invest in these three geographies? So I cater to Singapore, India, and Dubai. So we'll just dive a little bit into how we can do what we can do, how to avoid double tax, and common mistakes that we NRIs do, FEMA traps, how can we plan our return a bit better. So I guess we can start. Sir,
Yes,
shall we
yes,
start?
yes, please. Thank you.
Perfect. Okay, so let's understand who is an NRI. Okay, so for all of us, right, what we know is from income tax point of view. And what we tend to miss is that definition of NRI differs from FEMA's point of view and income tax point of view, which sometimes tends to become a problem. Okay, so let's discuss who's a resident based on Income Tax Act. Okay, so according to our Income Tax Act, anyone who has stayed in India for less than 182 days in a financial year is an NRI, or less than 60 days in a year and 365 days in last 4 years. Okay. And for returning NRIs, the rule changes to 60-day rule. 60-day rule becomes 120-day. That's some relaxation that has been given to returning NRIs, right? So, and but an NRI from an income tax point of view and FEMA point of view is different. So, from income tax point of view, they look into the timeline of 182 days. But from FEMA's point of view, the moment you leave the country for with intent to work abroad, right, for work purposes, from the that very day, FEMA starts treating you as an NRI. Okay, so what does that mean? What it means is that your tax obligations may be impacted by this. You're still a resident from income tax point of view. You may have to file your return in India for that particular year, but your banking status, your NRE, NRO accounts, and rest of the things have to change immediately once you move. Okay, so that's the base. And now you know that our residents also, like as NRI, also there are three categories with respect to residency. One is a resident, one is non-resident, and not ordinary resident. Okay, so who is a not ordinary resident? Not ordinary resident is that if you have been in a country for 9 out of 10 preceding years, or if you have been in India for 729 days or less during the preceding 7 years, then you are RNOR, not ordinary resident of India. Okay. So, how does that change? How does the scenario change for you in that case? We'll discuss in some time. Okay. So, if you are an so let's take an example. Okay. So, for example, there's a guy named Rahul who leaves Bangalore, for example, on 1st November for, say, an assignment in Dubai or on employment visa. So what would happen legally? So we are talking about resident and non-resident with respect to FEMA and income tax, and then we'll dive more into RNOR. Okay, what happens to that? What happens to Rahul, and how will his income be assessed? So for example, if this guy is spending 185 days, say in India, from April to October, which is greater than 182 days, he becomes a resident from income tax purposes. But at the same time, FEMA, as I said, will start treating him as a non-resident from day one. So what would be the next steps expected from him? Next steps would be that he has to open an NRE account, bank account, the moment he goes out of India. All his India investments has to follow NRI FEMA rules. Okay, so we won't be waiting for the year end. The intent and departure is the key from the point of view of FEMA to treat you as a resident or a non-resident. But as far as your income tax is concerned, Income Tax Act is concerned, they take into residency rules into picture. Okay. Now I was talking about resident but not ordinarily resident, right? So not ordinary residents. So let's understand this from point of view of this another guy. There's a guy named Deepak, for example. Okay, and he returns from Singapore, say in August, after working in a country in Singapore, say after 15 years. Okay, he has some investments, he has some FDs, maybe he's owning some property. Then how would the scenario change for him? We'll understand it from the point of view of a person who has spent time outside India and now is returning back to India. So, how would things change for him? So, the condition to treat an a resident to be an ordinary resident is an NRI to be a RNOR is that he has to stay in a country 9 out of 10 preceding years. Okay, and his stay has to be greater than equal to 729 days in last 7 years. So now let's understand from his story how things will change for Deepak. Okay, so first of all, any rental income or any income that he is earning from sources which are based in India will be taxable. But any income that he has earned on his NRE accounts, or he is earning on the properties or income that he has from, say, Singapore in our case, will be exempted from tax for him. Okay, guys, any question till now?
Oh, I think, Jagriti, there is one comment here. Yeah, there is a question here.
Yeah.
Rupesh has asked, I understand that NRO conversion and NRE account both are independent. Hence, an NRE account can be opened even if NRO conversion process is pending from bank side. Please confirm.
You're right. You're absolutely right. NRE and NRO are two separate accounts. So if your NRE is already in place, NRO can still wait. That's not a problem. But ideally, it would be better if you can start the process simultaneously. The timelines may be different, but if your NRE is in place, you are sorted, if that answers your question.
The thing,
Rupesh,
yeah, it's fine. I think I need, if anyone would like to ask any question, you can try to unmute yourself and ask. Otherwise, Jagriti will move ahead. Anyone, you can raise your hand or unmute. Yeah, Siva Krishna.
Yeah,
Yeah,
hi. Good morning.
yeah.
First of all, thank you for having this session. It's very helpful for us. I'm from Abu Dhabi and
okay,
I've
hi.
been NRI for the past 3 years. I just have one query regarding NRI FD interest, that point number three that you have just mentioned.
Yeah.
So, if I have an FD in outside India and if I'm getting interest, even after I'm coming back to India, it is exempt under Section 10(4).
Yes, it is exempt, but that's what we are going to. So it is exempt, yes, but you have an RNOR window that is for 2 to 3
Okay.
years, 2 years specifically. So after 2 years, you need to convert your NRE FD into resident FD, and then your interest will be taxable. So the best way to manage this is that, but this benefit applies if you have an NRE FD, it's a continued FD and the maturity is later. So if you have an extended FD, then you still get this benefit up to that point. So to answer your question right now, of course, that income is exempt. You don't have to pay any tax on it. But how we plan it better, we'll discuss during the course of our presentation.
Okay, thank you so much.
Yeah.
Okay.
Yeah, there's one. Sahil, can you unmute yourself and ask a question, brief question?
Yeah, hi Jagariti. Thanks for the session, first of all. So I just want to check. I moved to Dubai 2 years back, so but I never opened the NRE account. So and I don't have any income at present from India. So do you think still I have to open the NRE account?
No, so if you don't have any income and you don't intend to do any transaction in India of any sort, uh, it's your discretion whether you want to or you don't want to. But if you have any interaction with Indian ecosystem where the transfer of funds is involved, you can only do it through NRE and NRO. Technically, you are not allowed to hold a resident account in India anymore.
Understood. Got it. So
Okay.
do you think that department is going to check each and every account like unless and until they are going to check your passport or something, then only they get to know you are the non-resident from India perspective. Otherwise, they are not able to check that part, right?
But why do you want to get to a situation where department checks and catches you? Better be compliant, no? Rather than discussing non-compliance.
And but I just want to check if going forward I want to convert like my India account to another account. So still it's okay, right?
No, so you have to close down your local account and you have to open a separate NRE account.
Got it. Got it.
Okay, guys. I think you understand the concept of residency and NR and OR, R and OR. So I think we can move forward. See, we'll make it interactive and we'll discuss more case studies, so that we can understand things a bit better. Is this the approach? Is Do you like this approach? Do you want me to continue like that?
Yeah, I think Jagriti, you can finish it and then we will go ahead. Yeah, so you continue because then questions will not stop. So you continue
Yeah.
with the session and whatever time is left, we will take the questions as
Okay,
well.
perfect. So I think we all understand the RNOR concept very well. We all are aware of this. So as I was saying, see, any income, any India source income will be taxable for you guys if you are an NRI or RNOR. If any foreign income, right? Any foreign income or your NRE account, FD interest, or any investment income that you have, which is foreign source, that will be exempted. But of course, your RNOR status has a window. Okay, it has a window of 2 years. So you have to plan it a bit better. Okay. So now Let's move to our next case study. Okay, so we all face this question, right? That what is taxable for me and what is not taxable for me. So let's understand it from another example. Okay. So the basic rule is that NRIs are taxed only on the income that is accrued or received in India. Foreign income are not taxed in India. Okay. But definitely there are certain rules to it, because see, we have different scenarios, we have different situations, we have freelancers, we have different projects. So there are different ways an income can be seen, as to deem to accrue or rise in India, or it is a foreign income. There's a thin line. We have to see certain conditions, and once that your income fits the condition, it is treated as a foreign income. Okay. So let's understand this concept based on this example. So Priya is based in Singapore. Okay. And this is everything she has. You can, since I'm based out of Singapore, most of my illustrations may be out of Singapore, but we can say, okay, Priya is based in Dubai. She has, so basically, these are the things that she has. Okay. She has a Singapore salary. She has an NRE fixed deposit. She has a rental coming in. And there's an Indian mutual fund. Okay. So out of these, so we have covered different aspects, right? That we NRIs do usually have, the kind of income that we usually have. So as far as a Singapore salary, or we say a salary from a foreign country is concerned, if you are working outside India and services that you are delivering or the company that you're working for is outside India, then your salary is not subjected to tax in India. And from Dubai perspective, even if your salary is deposited in your NRE account, it is not subjected to tax provided you are providing service to a company who is based out of Dubai or based out of India with no permanent establishment in India. If your company has any kind of permanent establishment in India, right, then your salary can be deemed as earned in India because your company has a PE in India, and the government can say that we assume that the salary is being paid from the India PE. So what you need to really clarify and understand and establish is that any salary income or any income that you are earning outside India is for and from a foreign entity, not from Indian entity, and you're not providing any services in India, because any service or that you provide in India is taxable. Okay, that comes from salary point of view. Then in NRE fixed deposit. So any interest that you accrue on NRE fixed deposit is not taxable in India. And the money that you hold in this account is fully repatriable. So if you have any income in your NRE or if you have any amount in your NRE, you can repatriate that money back to your country without paying a single dime in India. Okay. And of course, if you have any income that you are generating from India, where the source is in India, then it is taxable in India. Okay. Then we have, yeah, then we have Indian mutual funds. So, of course, you do get the exemptions and stuff, but it will be taxable in India if you have an Indian mutual fund on which you are paying, on which you sell and have any gain, then any gain is taxable in India. Okay. Guys, is it all clear? I just want to know that you guys are following. Is it done? All clear? Can I have a thumbs up? Sir, is it all clear?
Yes, Jagariti, yeah, I think thumbs up have now come. So please continue. Yeah.
Okay, perfect. Because,
Y yes, yes. I
yeah,
request
I
all, I request all to please hold on to your questions. You can write it down and then we'll give you time. Don't put it on chat because we are not seeing it. And then we will take it up. Yeah. Thank you. Yes.
right, absolutely. So let's move on to our next slide. Okay. Now, another issue is TDS. Okay, and we all, I think there are certain gray areas on the TDS, and we really need to understand the nitty gritties of TDS. So let's understand TDS from this example. Okay, there are a lot of case studies and examples that I'll give you so that the concept is clear and we understand the perspective. Okay, so let's talk about Arjun. Now, thankfully, this guy is based out of Dubai and he has a flat in Mumbai. Okay, he purchased this flat in 2015 for say 45 lakhs and he's selling it for rupees 1.2 crore. So ideally, right, the TDS has to be, or any tax has to be deducted on the gain. But here is something that we need to know. As NRIs, if we are doing any sale, the TDS will not be deducted on the profit. The tax will not be deducted on the profit. The tax will be deducted on the selling price, which means that when the money is being given to you, right, the tax will be deducted, the TDS will be deducted on the full 1.2 crores and not on 45 lakhs. And this is a confusion with a lot of people, which a lot of people have when they are dealing with property, because our understanding is different. Okay. So now what happens in this case? So the cost is 45 lakh. Sale price is 1.25 cr, and your LTCG is 75 lakh. So technically, the tax should be 12.5%, 9.37 lakh. But what has happened? You have paid a TDS of 15 lakh because your sale price was 1.2 cr. So you have done a overpayment of 5.63 lakhs, which is sitting with the government for 9 to 12 months unless you claim your refund, right? So what should we do to prevent this situation? What is the smart move? Smart move is section 197 certificate. That certificate is to charge TDS at a lower rate. What do I mean by that? Okay, so what you can do is you can apply this certificate. Okay, and you have to tell the assessment officer that, see, this is the lower rate of tax which is applicable to me. The TDS on the transaction is this much, so can I please get a lower rate of tax deduction? And then once the AO approves, you can charge a lower rate of TDS on the whole transaction. What you need to do, you need to actually request your CEO, or if you are doing it yourself, you have to prepare the whole calculation yourself. Okay, get it certified from any chartered accountant, and then along with the application, you have to attach that working and submit to your assessment officer and tell them that, see, this is my request, can you please issue this certificate? It usually takes 4 to 6 weeks technically to get this thing done. So the request would be, if you're looking for this, apply much in advance. Okay. So what happens if you do not apply for this certificate? If you do not apply, then again, you can claim refund, but then your money would be sitting with the government for 9 to 12 months until the whole thing is processed. Okay. Okay. I can't see the thumbs up. If everyone is okay, I'll move to the next slide. So you need to tell me if there are any thumbs up and people have understood.
Thumbs up are there. Yeah. So,
All right, perfect. Let's move on to our next. Now, let's discuss the next section, which is investing across India, Singapore, and Dubai. Okay, so we'll just discuss about advantages that we have in or provisions that we have in these three countries. Okay, once we have understood it, the tools, who can help, what kind of securities, we are not going to cover this. That's a very subjective matter, and we do not propose or propagate any kind of investment. Okay, so we'll just tell you what is there, and then later you guys can decide for yourselves. Okay, as far as India is concerned, so any money that is there in your NRE account, right, any of your foreign earnings are tax free. So any FDs that you are doing, or any money that you are keeping, any interest that you are earning, you can keep it here and earn money on that. So that is your NRE account. Okay, then you have NRO account. So basically, NRO account is for your Indian income, right? Where you're receiving all your Indian income, you're paying TDS, and then you can repatriate $1 million, USD $1 million to your country of residence. So if you're holding any money, or if you're receiving any income in India in your NRO, then the limit is 1 million USD. There are ways with which you can plan your repatriation from NRO to NRE. But yeah, it comes with a cap, and we can discuss that later. Then another source of investment could be FCNR. So FCNR is your foreign currency deposits or FDs that you can have, and the any interest or income on this is fully exempt. There is no currency risk, and this money is fully repatriable. Then there are certain equity investments and certain investments in AIFs and REITs and everything that you can do. Now we also have channels where you can invest safely into Indian startup ecosystem. You have AI funds, you have Gift City funds, which is more suitable for NRIs to invest into this market. Then it's property, of course. Residential property and commercial properties are allowed for NRIs. We cannot buy farmlands, and any property that you buy, or any investment actually you do in Indian ecosystem, has to be through your NRE account. Okay, that's from India perspective. Now let's talk about Singapore. So beauty about Singapore is that we do not have any capital gain tax. So any equity investment, private equity, any crypto investment, any equity, any SGX equities, any investment that you do, uh, at the time of exit, you will not have any capital gain tax because it's zero cap gain tax in Singapore if you're a Singapore resident. There are ways where we can, NRIs can invest in Singapore in ways we can plan the investment, but it is not part of this discussion for now. Then, of course, we have rental income. So if you have been part of Singapore ecosystem and you have moved back, if you're earning any rental income, then there's a TDS that is deducted at the rate of 15 to 17%, and the income can be repatriated to India. Yeah. So then we talk about there's a double taxation avoidance agreement between Singapore and India. So any cap gains, absolutely, which you get on shares here in Singapore are tax exempt, absolutely, because there's no cap gain tax. But there are certain provisions which kick in, and you may have to pay tax on the money that you repatriate back. So that needs to be seen. Same with dividend. Singapore doesn't have a dividend tax. Okay, so if any one of you has any kind of businesses here where you are a Singapore resident, then you do not have to pay any dividend tax here. Okay. To claim the benefits of double taxation avoidance agreement from any of the countries, you need to have your tax residency form. And in Singapore, there's form 10F that you need to file. And if you have that form, you can submit the form to Indian authorities and you can claim the benefits of double taxation avoidance agreement for Singapore. Now we'll come to Dubai. Of course, if you're having any salary investments, rental, they are all untaxed in UAE. It's a tax haven. Then there's a corporate tax, but we are not going to get into that. So basically, bottom line is that if you earn any salary investment or you have any kind of rental income coming in UAE, it's quite safe. There is no tax there. Safe everywhere, but yeah, tax wise, there's no tax here. And as I was saying, that if you're getting any salary in your NRE account, then there is no tax on that salary, provided you are working for a UAE entity with no permanent establishment in India and you're working on the projects where India involvement is minimum. Okay, all good. Let's move to the next slide.
Yeah, Jagriti, can I disturb you? There was a question few minutes back on YouTube by Sanjay.
Sure.
He had asked, "Hi, please elaborate more on taxability of mutual fund investments in India, keeping double taxation treaty with UAE." This was asked few minutes back. Yeah,
Can I can I answer this question at the later segment? It'll take some
yeah,
time.
yes,
Yeah.
yes, that's
Okay.
fine. So
Please hold
Sanjay,
on to the question. Yeah.
yeah, please hold on. Thank you.
Yeah.
Right.
Yeah. Um, okay. So now we talk about avoiding double taxation. So we deep dive into DTAA. Okay. So what is double taxation avoidance agreement? Basically, it's an agreement between two countries where we decide, um, which income would be taxable in which country, and there are certain benefits which are given to the assessees, right? So it decides the taxation rights between two countries. So India has double taxation avoidance agreements with over 90 nations here. So you can apply whichever is more beneficial to the taxpayer. So again, let's take an example. So as we are talking about income, right? So as per DTA, income is taxed in one country only. The other country exempts it entirely. So see, there are certain provisions, right, in a DTAA, and provisions vary per country. You're not saying that provisions across all the double taxation avoidance agreements are same or similar. There are multiple agreements, and multiple countries can have different kind of agreements amongst themselves. Okay. So, for example, we've taken an example here that there's this guy, Vikram, for example, who has a Dubai salary. So, if he's earning salary in UAE, his income would only be taxed in UAE. So basically, source of income is important. If the source is not that particular country, then uh, so income is taxable in the source country. So for example, if the income is not earned in India, then it won't be taxed in India also. So in our case, since a person is earning a salary in UAE, then he won't be taxed in India. So effectively, his tax liability on the salary would be zero. Okay, and then we talk about tax credit. So what happens is there are certain incomes or situations where an income may be taxed in both the countries. And then what happens is that provisions of DTAA kick in, and then tax paid in one country can be taken as a credit in another country. Okay. And for example, Aisha, for example, Aisha is a person residing anywhere outside India, and she has a dividend income in India. So any payment which is going to go out of India would be subjected to TDS or withholding tax, right? So it's a dividend income. So barring few. So if it's a dividend income, right? For example, she pays a tax of 10%, uh, preferred DTA rate. Then she can then to claim this benefit, she needs to submit her Form 10 and TRC to the company, and she'll take the benefit of the beneficial rate. So let me explain it better. So what is happening here is that there's this girl staying in a country where India has a double taxation avoidance agreement. Let's say she's a resident in Singapore. Okay, so what happens then? She is earning a dividend income and she is a resident of Singapore. So any income that she's earning is subjected to tax. So if she's getting the dividend income in Singapore, here there is no tax, right? And as per double taxation avoidance agreement between Singapore and India, a preferred taxation rate is given for those who are earning a dividend income in India per se. But to claim that benefit, she needs to submit her TRC and Form 10 to the Indian company. And in a way, she is getting the credit of the tax that the in a form of credit, actually the tax that she would actually have paid, and she's getting the benefit of tax rate. So basically, instead of 20% of tax, she's just paying 10%. Guys, is this example clear, or should I give another example?
Yeah, can you please answer in a chat or with a thumbs up whether this is clear? One more request has come, so maybe you
Yeah.
can give one more.
Oh, one more example. Okay,
Yeah,
so
yeah, yeah.
let's break it down. Let's break down the concept into two examples. Okay, first, let's understand the concept better. Okay, so what happens is that sometimes income which is earned in one country is taxable in both the countries. Okay, so let's take a simple example. The simple example is there's this guy, say Vikram only. Okay, he is working in Dubai, he's earning income in Dubai, but what happens? He's been sent to India for a project where his stay is more than 185 days and he earns some income there. Since he has earned that income in India, he's subjected to tax. His Indian income is subjected to tax in India. But since he is employed by Singapore, his total income will be taxed in Singapore. So what is happening here is he's paying tax in Singapore as well he's paying tax in India. So what he can do is he can take a tax residency certificate. He can take his Form 10 and he can go to Indian entity and say, see, this is the tax that this is my tax liability in India. And this is the tax which I've already paid. So if there's any difference of tax, that is the amount that he would be paying. And that's how it takes the benefit of the DTAA. Okay, that is one. And second example is that how do we take the benefit of a preferential rate of DTAA? So that is our example. For example, you are earning a dividend income, right? Where the actual tax rate is X percent, say 20%. But being an NRI and due to the double taxation avoidance agreement between two countries, you get a preferential rate, okay, of withholding tax or TDS, whatever you may call it. Okay. So what you can do is you can submit your TRC and Form 10 to the authorities and tell them, see, I want to avail the provisions of DTAA, and as per DTAA, since I'm a resident of X countries, it allows me to have a preferential rate of tax. So if you give that to Indian authorities, they will give you a preferential rate of tax, which is 10% in our case. I think now it is clear. Guys,
It's
thumbs up.
yeah, yeah. It's clear, Jagariti. You can move ahead.
Okay. Now, so let's move to our next slide. Okay, so basically, it's just how to claim the foreign tax credit in Form 67. It is nothing but I have just gathered this information and which is readily available on the tax website. So maybe if you guys want, rather than going through this whole slide, what I'll do is I'll just share the slide with you all, so you have an idea of what documents and etc. you're required to do. Can I skip this one?
Yes, yes. Yeah, that's fine.
Okay, now let's come to my favorite slide, and that is common mistakes that we all do and how to fix them. So, first mistake, not filing ITR despite taxable income in India. So, if your Indian income is above a certain point, say we've taken 2.5 lakh, or if you have to claim any TDS refund, by the way, this is 4 lakh now, right? Or if you have to claim any TDS refund, right? You should file your tax in India. See, we all have FDs. We all get these, statements at the end that okay, this is the amount of TDS that has been deducted, and we all have to claim refund, right, on our FDs, deposits, interest, whatever. Sometimes we tend to ignore this aspect, stating that I don't want to file. I don't have to file. Hassle. Let's avoid it. Let's not do that. Let's file our taxes because see, one, we are missing out on the refund part of it. Maybe the amount is not high or low, whatever. And secondly, there's an obligation for us, maybe because of the kind of income we are generating in India, to file returns in India. So let's not wait for government authorities to come back to us with penalty that okay, you missed filing your ITRs for XYZ years. Let's file them on time. That's one. Second, foreign income credit to NRO. Okay, so any foreign income, right, you can only transfer to NRE. Make it a rule to transfer it to NRE. Why? Because there's a free repatriability here. You can repatriate your money easily from NRE to back. Okay. If you are transferring your money to NRO, you are losing your free repatriability permanently. There's a cap. Okay. So do not transfer your foreign income in your NRO. Please keep it in your NRA accounts. Okay. No TRC before payment, lose double taxation avoidance agreement benefits. Absolutely. See, if you have a DTA which is providing you a beneficial rate of tax, or if maybe your income is exempt according to the DTAA provisions, then please take benefit of that. The mistake we do is we do not go through the double taxation avoidance agreement. We just take the income tax rate or income tax provisions per se without even referring to DTAA. If there's a double taxation avoidance agreement, then double taxation avoidance agreement holds it, the provisions of this agreement holds above the rates or provisions of Income Tax Act. So at least go through the double taxation avoidance agreement before you know claiming your refunds or filing your taxes. Just make sure you know what you are doing. And if you think there's a transaction coming, a big transaction coming, right, where the rate at which your TD at which your at which the tax is supposed to be deducted as per the provisions and the rate according to DTAA is different, then see which one is more beneficial for you and request for a lower TDS certificate. Do not block your money for those 9 to 12 months and wait to claim the refund. Okay. Then again, Form 67, right? So if you don't file your Form 67 on time, then your foreign tax credit is permanently denied. File your forms on time, please. Again, with respect to property sale, please read section 197 before the deed or before you enter into such kind of transactions. We've already discussed this that there's a way that you can reduce your tax liability basic. So if you apply for lower TDS certificate, so please go ahead and do so. And also, the biggest mistake is for those who are moving back to the home country, to India, ignoring the RNOR window on return to India. See, you can really plan your tax effectively if you know what is your window. You have these 2 years where any kind of foreign income that you earn is exempt. It is the best time to plan your property sale, how you want to liquidate the money that you want to get into India, because for these 2 years, any foreign income is exempted for you. So do your tax planning effectively. Okay, now this is a basic checklist. So I think I won't go into detail, but would be happy to share this with you guys later. Do you want me to go through this or you want me to take up the questions? What is that you want?
Yeah. So, yeah, there's a question. We can start taking questions, maybe Jagriti. Yeah,
All
Jignesh,
right.
can you
Okay.
please unmute yourself and ask?
Hi. Hello, Prabhdeep. Hello, Jagariti.
Yes,
I
yes.
Hi.
just wanted to ask about the taxation on a mutual fund. Being an NRE, like if I invest in the mutual fund of India, so what will be the
Mhm.
taxation like perspective?
No, so if you are investing in mutual funds, tax will only come into picture when you liquidate it, right? Are you receiving any earnings out of it?
Not yet. Actually, I
Yeah.
invested
In
only
that
up
case,
to
then the
2.5
taxation
lakh,
doesn't come into picture.
which is
Sorry?
a I invested only up to the 2.5 lakh of investment limit where I don't get the taxation and where I don't need to pay any taxation on that. So that I
Then
am
you're,
continuing, which is linked with
yeah.
I think ULIP. And over and above that, I'm not doing it because of the taxation reason itself. So if you can elaborate on that, I can think about and plan about accordingly.
No, so if you are limiting your exposure in India up to that, I would say, so you're based where, may I know where you're from? Which country?
I'm in UAE itself.
UAE. Okay. See, so if you're limiting your exposure to the basic tax limit, it's fine. It's your personal decision, right? But your tax liability would only kick in once you have the capital gain on it, right? I think as far as Dubai and India is concerned, they do have a favorable tax limits, tax rates there. I can actually check and get back to you on the exact rate that is there in the double taxation avoidance agreement, and you can then plan accordingly. You can get a favorable rate, but of course it won't be zero tax. And anyways, if you are in UAE, you do get a lot of benefits, and there are different ways of investing into markets. You can actually invest in international markets if you want a bigger exposure with lower tax.
Okay.
Okay. Yeah,
Okay.
so before
Thank you.
I move to Siva and Tanuj, yeah, Vishal, I think, had raised his hand first. Vishal, can you please go ahead?
Good morning, Prabhdeep ji, and
Yeah.
good morning, Jagariti ji. It was a nice session conducted by Pradeep from your side, and thank you very much for Jagariti your time. I
No
have
problem.
two questions. Many people who come from India starting right, and they have their normal resident account, and by the time this account is never been converted in the NRO accounts, right? But even though
Right.
they have disclosed the when they file the return, they disclose as a NRE accounts. Like when they file the return, they show as a NRE, even though it's not converted to the NRO, but in written they mentioned like that way. What is your take on this one, and what is the implication by the ITR or by IT assessment point of view? Can you put some light on that? And secondly, I have one question on, like, everybody is aware about the stock market and they do the margin trading, right? And this margin trading, the company normally charge the interest vary from 8% to 18% on the funding done by the respective companies, right, against the stock what they are trading, right? So this interest is again can be deductible on the gain, or gain, if it is there is a gain, can be deductible, and then we can pay the normal tax rate is applicable, or if it is a loss, then we can add back the this interest paid to the respective company to as a to claim under the ITR, because companies normally paying their tax on the income earned by the on the interest earned by them respectively. So if we are not getting this claim, so it is a, like a double taxation from our side, means we are losing that claim, and plus the company who earned the interest income, they already paid the tax on the income earned by themselves.
So I'll answer your first question, and I won't like to deep dive on the stock market trading part because that's outside the purview of what we are discussing right now. I'd be happy to help you on a personal call, but let's keep the questions to this session. Okay. So I'll answer your first question. So your first question was my take on people who do not open NRE accounts and declare
No,
that
no.
as.
My question is, people do open a NRE account, but they have not converted their resident account into the NRO account, and even though they file the NRE return, they disclose the same accounts.
No, no, that
So
is
what is
that
the
is
time?
incorrect.
I'll repeat again. You come to the UAE, you have a 5 resident account, and you
Hmm.
came here, you settle down here, you forget to convert your resident account to the NRO account, right? And even though you open your NRE account, right? And very
Hmm.
next year, you have filed your NRE return by disclosing
Hmm.
all these accounts. In the return itself, you disclose everything, because by PAN number you will take it out all the link account nowadays, right? And this
Right,
will be reflected in your form completely, right? And you are filing, but
right.
only you knows this is not the converted to the residential account to the NRO account, right? So what is your take, and what is the time limit by the government to be converted? If not converted, then what is the implications?
So if the account is not converted, first, it's not only me, but government would also have that info because, as you rightly said, all the accounts are linked by PAN and Aadhaar now, right? So if you are not opening an NRE account or NRO account, if you're not opening an NRO account and you're disclosing the income in your Indian account as NRO account, it's incorrect. We cannot do
No, no,
that.
ma'am, you are not getting my point. Still, I am
No,
saying that I already opened the NRO account, I already opened the NRE account, but existing account is not be converted to the NRO account.
okay, then any income that you are getting in that, right? It's technically illegal. You cannot hold that account. Okay, so government, if you are doing a
No,
proper
no. What is
disclosure,
the time frame government is giving? Because you are already disclosing this
if we
account. You
doing
are
it,
already like. Let me complete, ma'am. So what I am
yeah,
saying that whatever interest income you earning on this residential account, right? You are filing your tax liability calculation, everything what is eligible, and you are offering the tax whatever it be there within the terms and condition and the provision of the ITR Act, right? And you are submitting your return, right? I am just asking you the what the FEMA guidelines says, because once you come here, the FEMA guidelines will come in the pictures, or it is just we have to wait and watch, because this is the normal scenario of the many of the non-resident Indians who came
see,
here and they never been converted this account, not by intention, maybe they just forget to convert it.
right. So since you are paying tax and everything, sir, see, as per FEMA is concerned, it should be done immediately. Okay, uh, as technically from legal point of view, you cannot hold that account. Okay, if you have not done it but you are still paying your tax and everything, it is advisable to do it at the earliest. Okay, before any AO officer notices it, or before any liabilities come to you on this, although you are paying tax and stuff, legally you cannot hold it. So there's no separate provision saying that, okay, if something of this sort happens, right, then you'll be penalized or something of that sort. But it can be, and it will be dangerous, because technically you cannot hold that account in India from famous point of view. From tax point of view, you're already paying. I mean, they also must be filing your TDS and stuff. So that is the difference between FEMA and tax, right? It is just that when they realize, you will get notices, you would have to close down. So as I say, right, there's no time frame written anywhere per se, but practically, as per the guidelines, it should have been done immediately. If not, I would request, please do it ASAP. Don't wait for any kind of provisions or issues, or to kick in. But nothing is written as such that if you fail to do so, this is the time given by government specifically for the conversion.
Okay. Thank you. Jagriti, before we move ahead, we are running out of time. Can we extend by 10 odd minutes and take questions, whatever we are able to take in those 10 minutes?
Sure, sure.
Okay. Yeah, Siva, can you please go ahead? Siva Krishna.
Hi, Jagariti. Hello, Miss Pradeep.
Yeah.
Thank you for conducting the session once again, and it was amazing session. And looking forward for more sessions in future.
Yeah.
Keep up the good work. I just have two questions, which would be a very common question. First of all, I don't have any fund transactions in India. I don't have any investments or any sorts of fund movements. All I do is I
Okay.
transfer money for family support. So my question is it okay that I have both NRE and NRO account? So is it okay if I
Mhm.
transfer directly to the NRO account or the savings bank account of my family, or should I first transfer to my NRE and then transfer it to NRO or the savings account of the family?
No, see, anyways, any transfer that you can do in your NRO, no problem, and your family can withdraw the money from there. That's not a problem, but you cannot repatriate that money back. Okay, there are restrictions
Okay.
to it. Uh, it's for family support, so they're withdrawing that money, right? It's an expense that you are doing. You can
Yes.
actually transfer that to your family's account also, because under the support or family support or expenses category, that should not be a problem.
Okay. Okay. Understood. And my final question is, if I transfer, like I converted one of my savings account to NRO, but I didn't convert another one to NRO. So I need to do that at the earliest, right? There's
Yes,
no
please.
excuse. Okay.
Yes,
And
please do.
I just have savings interest and I get TDS deducted on that interest. But I'm not filing like the income tax return because that TDS amount on the savings interest is very low. So I didn't file it. Would it cause any issues?
Yes, because you should know. Technically, you have to file your earning interest on which TDS has been deducted, right? So
Yes.
you should file if you have to claim refund. That should have been done.
Okay. So what is the next step? I should file
Please
for the
file.
next time. Yeah.
Please file.
Okay.
Please go
Okay.
ahead and file your returns.
Thank you so much. Thank you.
Okay.
Okay.
Thank you. Yeah, Tanuj, can you please go ahead?
Yeah, thank you for this session, Prabdeep and Jagriti. I will not take much of your time. I know we are already extending it. So my question is on the FEMA part of it. So
Mhm.
I have a freelance permit in UAE and residency also, but I am a resident in India. I do not cross 182 days outside India or within UAE,
Mhm.
right? So I am a resident in India as per Indian taxation policy, but I do have income in UAE. I do have freelance
Um,
permit. I have a UAE account, bank accounts, but I do not stay in UAE. I stay in India. Whenever I need to do some freelance work, I come to UAE under this residence permit and I do it. And I get my income within UAE accounts. Okay.
no,
Now I
then,
do not have, yeah,
sorry, please complete.
yeah, and I do not have any NRE or NRO account. Whatever income which I'm getting in UAE is it's in UAE. I get transferred that UAE amount to my saving accounts. Uh, So what should be the correct way to do that? Because I'm not a
Okay.
NRI. I'm a resident in
No.
India.
So if you are resident, then any income that you are earning is taxable in India,
Okay.
right?
Yeah.
You are a freelancer. the place we are providing service is India, right? Or are you traveling? So again, you're traveling to Dubai, you have a Dubai residency, and you are keeping your income outside, is it?
No. So, yeah. So basically, I'm working in Dubai. Whenever it is required, I come to Dubai. I deliver a project. I get my income in Dubai accounts under that freelance permit, and then I
Right.
come back to India. So I do to and fro too much, but I'm not completing my 182 days which I need to stay outside India, right? So
No, no,
technically, I'm a resident Indian.
no. You have to spend 182 days in India to be a resident, 182 days or more. So, how many days are you spending in India and how many days are you spending in UAE?
Yeah. In UAE, it is around 150 days. So in India, I'm staying around more than 182 days.
Yeah, then you're, see, if it's your, because you're resident in both the country, but where is your place of residence? It's India. You
It's India.
just go,
Yeah,
yeah, you have a citizenship, you have residency in India, and you have residency in UAE also. You have that
yeah.
freelance permit where you go deliver and you keep your money there. See,
Correct.
you have a very different situation, right? So actually, we look into the source. Okay, currently you are going to Dubai, no money is coming in, and source is also Dubai, and you have residency permit. So technically, that income should not be taxed in India. But you are a non-resident here, resident here, ordinarily resident. No, you're a resident here, right? And
Yeah,
your income that you are earning here is should also be subjected to tax. I think you may fall into, because you're based out of here, right? And you are a resident in India. Uh, you may be that borderline case where you file taxes in both the countries and claim benefit in one.
okay.
Technically, your Dubai income should not be taxable because the source is there, you're
Correct.
going there and delivering the work as a freelancer. You can do it. And technically, your Indian income, since the source is there, should be subjected to tax in India. But the thing is, since you are a resident in India, then your global income needs to be taxed here.
Correct.
So
So,
currently, yeah. So what are you doing currently?
yeah, so my question is not around the taxability. Taxability, I'm pretty much confident that my global income will be taxed. That's
Hmm.
perfectly fine. Whatever the tax will, liabilities will be, that we will be taken care of. Right. My only question is on the FEMA part of it, because I have expenses in India. Right. So I need to bring the money which I earned in Dubai to India, and I bring it to my saving accounts, not
That
to
is
an
okay.
NRE. That is okay, right? There will be no
That you are
FEMA.
a resident. No. You are resident in India, right? It
Mhm.
NRE and NRO are supposed to be opened by non-residents. You are a resident in India. Since you are an Indian
Correct.
resident, you can have your
Mhm.
savings accounts and stuff. You don't need an NRE or NRO.
Okay, so I can bring in that money to my saving account. There will be
Yeah,
no
yeah.
FEMA. Okay.
No, because you are a resident, right? You can hold a savings account in India. Only non-residents or ordinary
Mhm.
residents who are not a resident of India needs to have NRE and NRO to transact business.
Understood. Understood.
Okay. Yeah.
I'll have one final question on the housing part of it, the asset, right? So there's
Mm-hmm.
an asset which we purchased in a joint name, me and my brother. At that point in time, I was an NRI, right? I was staying in
Okay.
UAE and everything was there. 4 years
Mm-hmm.
back, I moved back to India and now I'm a resident Indian.
Right.
Okay. And this property is under loan and we are paying EMIs to it. So is there any
Okay.
requirement for me to declare to the bank or any authority that now I'm a resident Indian and the property is now is a resident Indian property?
So, since you have a savings account, you would have given these declarations to them already, right?
Yeah, yeah. So now like I have already converted my NRE account into a normal saving account. So the
Yeah.
transaction which
So,
is happening with the EMI part of it, it is being the same account. So there is no declaration from my side to them.
no, so you're paying it from your savings account. You are a
Correct.
resident, right? So you can claim
Correct.
the benefits of residence. So all that 30%
Okay.
deductions and stuff
Okay.
will apply to you. Since now
Oh,
you're a resident or your 2-year period
yeah,
has also passed.
correct,
You're a
correct.
pure play resident, so all the provisions applicable to residents will apply to you.
Understood, understood. That's perfectly fine.
Okay.
Thank you, Jagriti. I just want to
Yeah,
confirm on the FEMA side of it. Yeah.
right, right.
Mhm.
RJ, can you please unmute? Yeah.
Hi, Jagriti. My
Hi.
question is on the TRC. So basically, whenever
Mhm.
I apply for the TRC,
Mhm.
the UAE government gives only up to the date because the future dates cannot be in the TRC. So every
Mhm.
time I file the return, I need to apply two TRCs because of the December. UAE government generally FTA is giving for Jan to December, and whereas the
Mhm.
Indian system needs for up to March. Uh,
March.
there are certain cases where the assessing officer is accepting up to the March, and the next year I don't need to apply again for the same year. Otherwise, my
Mhm.
cost gets doubled, right? So it becomes 2000 instead of 1000. So, do I have any practical examples where the assessing officer is accepting the previous year filed TRC for the next year as well?
So unfortunately, TRC is for that particular year, right?
Uh,
So
so,
if
so,
you are
so
earning income for the next year, then so there's a period for TRC, right?
No,
If you
exactly.
pay,
So my question,
you
okay,
need not.
let me put it into the year. Okay. So if I have
Yeah,
applied the TRC, let's say I'm filing a return now in the April. Okay. So I
right.
have to apply the TRC for 2025 and March 2026.
Hmm.
Yeah. So I'll be applying two TRCs. Now UAE government gives me the TRC. Let's say if I apply in the April up to April only. Now when I go next year, okay, then again I have to apply for 2026 because only 4 months are covered in this, you know, and again I have to apply for TRC of 2027 up to March, so every year I end up applying for two TRCs. Okay, that is a question. Now there are cases where assessing officer is accepting the part TRC also because it is a
Mhm.
continuation, but
Mhm.
there are cases where certain assessing officers are not accepting the part TRCs. So, what is your practical experience if you have in whether they're accepting, not accepting, or is there any way where one TRC can be applied for 1 year?
So you can request your current country to issue you a TRC from for a particular period. Usually, this doesn't happen. Okay. But if you can request and get a TRC for that particular period, then it would be beneficial. See, it's
Yeah,
I
yeah,
don't have any
Uh,
Jagriti.
ready
see,
examples with
Jagariti,
me.
sorry, Jagariti, FT is very clear that they are
Yeah.
issuing it for the year.
Yeah,
Okay.
Uh,
Jagriti, I would like to interrupt. Actually, yeah, this is a issue which Indians are facing, and I think some representations were also being tried to be given.
Right.
I think so. As RJ Jagriti doesn't have experience, and this is specifically to UA. Maybe we
Mhm.
can look into it later and try to get some more examples from outside. Because this is a
Right.
recent problem, last 2 years only, if I'm not wrong,
Yeah,
maybe
yeah,
less
sure.
than
In
two
fact, I
years.
just wanted to understand,
Yeah.
right? Is
Yeah.
there any practical experiences,
Yeah.
on that matter, so that
So
we can
not
follow something the similar way and apply only 1 year TRC?
no, sir, as far as TRC is concerned, as I said, it's for the year. So currently, I don't have any practical cases where they have accepted, right? It's a very AO based thing for now. I don't have, unfortunately, any precedents where they have accepted. So, as sir said, maybe we need to deep dive a bit. I may not be able to help you with this request as I don't have any cited cases where I've seen this. We have to apply. I mean,
Yeah.
I haven't
Understood,
seen it
understood. Because
with
the
respect to
cost is involved, which
the yeah.
2,000 bucks, until unless you tax benefits are not more than 50, 60,000. Okay, there is no
Yeah.
point applying for the TRC only, or there is no point applying for the DTA.
Absolutely. I don't have any cases, but since you have raised this, what I can do is I can look into and consult and get back to you
Sure,
on this.
sure. That
If
will be great.
acceptable.
Yeah, thank you. Jagriti, just one last question. If Sanjay would like to ask on the mutual investments, I think he is here now in Zoom. Sanjay, would you like to ask, and then we will close? Yeah, Sanjay Sanghvi, on the mutual investments, would you like to ask a question? Or we can close. Okay, I don't see him right now. I think he's not it. Not here. So thank you, Jagriti. Thank you so much.
Thank you,
Thank
sir.
you to everyone who participated today. Sorry, we took 30 minutes more of your time. And your last words, what you would like to say.
Um, no, I really liked the session, and thank you for asking the questions that you guys asked. I hope the presentation, and I look forward to connect with you all. Prabdeep sir has my details, and I'm also on LinkedIn. So if there are any questions, anything, more than happy to take it offline. And thank you so much, sir, for this amazing opportunity. This whole session has been really nice and interactive and good. And thank you for being such amazing audience and such so interactive. Audience, because generally people like to keep quiet, but I think it was fabulous. So thank you very much for this, and I hope you guys like the session. That's it.
Thank you. Thank you, Jagriti. Actually, this topic is which interests everyone. And that's it for the day today. Thank you so much. Have a good day ahead. Take good care of yourself. Bye bye.
Bye. Thank you.